As a stock investor, you're obviously on the lookout for the next profitable market to put your funds in. However, while there are a lot of businesses emerging today, only a few show the potential for continuous growth even as far into the future. And Cathie Wood has shared her thoughts on some of them. According to Cathie Wood, the future belongs to companies that are huge on innovation, and investors who are able to seize these opportunities are likely to gain massively in the future. Hey everyone, welcome back to Tesla Tomorrow. Cathie is a big fan of innovation. The stock expert believes that innovation solves problems and has historically gained share during turbulent times. While this may be one person's prediction, and only one person's prediction, it is good to note that Cathie Wood is a long-time Tesla investor, and a stock investor at that too, and has a lot of experience in the field. The Tesla investor claimed that at the moment, the markets may seem rather dislocated. According to her, 2022 turned out to be one of the most challenging years in market history, as transparency was more important than ever and shares of innovation-focused companies suffered. Wood added that she believes an allocation to disruptive innovation is likely to balance a comprehensive wealth portfolio, since innovation provides access to potential exponential growth opportunities typically absent from broad-based indices. Is there something stock investors may be missing? Let's find out. But before we do, if you like this type of content, don't forget to subscribe and hit that like button, and also turn on notifications to keep up to date on everything going on with Tesla. In her letter, Cathie Wood cited some examples of game-changing innovation that the equity market largely ignored in 2022, and which will likely be huge ventures in the coming years. According to Wood, in the face of market headwinds and media criticism, these breakthroughs are corroborating ARK's original research and boosting its confidence that the firm's strategies are on the right side of change. She added that disruption can surface in surprising forms and at unexpected times. Amongst the examples cited by Cathie Wood, the ARK Invest CEO mentioned the autonomous technology, robotics, and electric vehicles, all of which are businesses operated by Tesla. Wood stated that in 2022, US auto sales dropped 8% on a year-over-year basis, and according to her, Tesla's sales increased 49%, and during the past 3 years, the car company's market share and total auto sales in the US had increased 240 basis points to 3.8%. Some other ventures mentioned in Cathie Wood's letter were digital wallet, blockchain technology, social commerce, and the energy business. Cathie Wood believes that only companies with a competitive edge on innovation can thrive amidst the expected inflation, and possibly deflation as well, and that the decreased economic growth will prompt a shift back into the type of companies that can grow regardless of the economic backdrop. Tesla has been impressive in terms of innovation, so Tesla investors can be rest assured that their funds are secured in a profitable company. Likewise, Tesla's energy business is another gold mine that's yet to be tapped. Tesla's energy business has been thriving over the years and is growing faster. The automaker disclosed in a previous quarterly letter to shareholders that it deployed 1,100 megawatt-hours of energy storage, up 62% year-over-year, which was by far the highest level of energy storage deployments that it has ever achieved. And to better address the fast-growing market for its energy storage business, Tesla said it was ramping up production at its factory in Lathrop, California. While speaking on energy demand, Wood stated that the demand for crude oil may have peaked in 2019 at 100.5 million barrels per day, particularly now that EVs are taking a share of auto sales and ride-hailing companies like Uber are partnering with car rental companies like Hertz to rent EVs. She cited Hertz's statement that EV maintenance costs are 50 to 60% lower than those for gas-powered cars. According to ARK's research, autonomous electric vehicles could lower oil demand by 25 to 30% to 72.6 million barrels per day by 2030, thanks to their high utilization rate compared to personal cars. Tesla's solar business is also a potential driver for company growth. In 2021, the company reported $801 million in revenue from its energy generation and storage business, which includes 3 main products: solar, its Powerwall storage device, as well as its Megapack. Although Tesla has not been fully focused on its solar business, there will still be opportunities to fully optimize the business in the future. With major ramp-up in Tesla's vehicles across its markets globally, this could be a sign that Tesla's automobile business is finally becoming financially stable. If so, then it's a good time for the automaker to shift its attention to the energy business that has, for long, taken a backseat to getting the electric vehicle assembly line in order. This includes Tesla's business of solar and energy storage. The momentum in the growth of Tesla's energy business seems to have continued into the fourth quarter of 2022, as the car company announced in December that it deployed 100 megawatt hours of energy storage capacity in a single project in Belgium. If Tesla is able to give more attention to its solar businesses, then this could be a driver for the car company to grow into a multi-trillion-dollar company in the next 5 to 10 years. According to JMP Securities analyst Joe Osha, Tesla over the past few years has really taken their eye off the ball with its energy business, despite being a visible brand. He said, part of what Musk thinks is that they can come back and take market share. And it would seem to me that the EV business is growing in the mid-teens as well. So maybe he thinks they can grow more quickly in solar because they can take share. They are an amazing company and they've done some amazing things, but they really mismanaged the business. In 2019, Musk claimed that Tesla is poised for a really crazy growth for as far into the future as he can imagine. He added that it will be difficult to overstate the degree to which Tesla Energy is going to be a major part of the company's activity in the future. Musk further stated that Tesla Energy could grow to roughly the same size as the company's automotive business, and solar would grow on a percentage basis, with storage second. He believes that both businesses over time will grow faster than automotive. According to Musk, these businesses are starting from a smaller base, especially considering their year-over-year growth, and it will be an absolutely incredible increase for these businesses in the future. Likewise, analysis covering the rooftop solar sector estimate that it can grow from a low-end estimate of 10% annually to as high as 20% based on the performance of the leading companies such as Sunrun, SunPower, and Vivint Solar. However, Morningstar equity analyst David Whiston has said that he can only take Elon Musk's claims with a grain of salt. According to him, energy probably stays a small piece of Tesla for a long time because there's only so much growth to come in auto, with new vehicles and autopilot. He added that he does not doubt the nice growth runway long-term for solar. Like a lot of things in investing, this may also not turn out to be accurate. Cathie Wood's company ARK Invest has also been rather keen on Tesla's growth for a long time, and judging by what Cathie Wood has said, it is most likely because of Tesla's interest in innovation. In Cathie Wood's letter, she cited that she founded ARK Invest for 2 reasons: to focus exclusively on disruption and innovating the market, and to create a transparent research ecosystem designed to surface and share information on the convergences between and among the 5 major innovation platforms evolving today, most of which Tesla is actively representing. Cathie Wood believes that money supply is slowly declining, commodity prices are deteriorating, bloated inventories are unwinding, and innovation is disrupting the traditional world order, and all these things are pointing towards lower inflation and perhaps deflation. As a result, the concerns in the equity markets have scaled to enormous heights as fears of entrenched inflation and higher interest rates continue to worry investors and shareholders. However, she thinks recent metrics suggest the real growth and inflation could be surprisingly on the low side of expectations this year. According to Tesla's EV and energy business, Wood also cited Tesla's potential in autonomous driving. According to her, Tesla expanded access to its FSD beta software to all owners in North America who had requested access, reflecting the automaker's confidence in its capacity with automotive and autonomous driving. Do you think innovation is the way forward for most companies? Let us know down below, and don't forget to tell us what your valuation of Tesla is. And while you're still here, go ahead and click on this next video on your screen. See you there.